We're building tomorrow,
but we're human today,
where technology meets us
and ideas lead the way. From business to connection, from vision into sound,
we turn the boldest ideas
into something real and loud. The synthetic echo,
where human meets machine.
Create it, build it, grow it,
Push beyond what you have seen.
The synthetic echo, the future starts right here.
Hello and happy Monday to everybody out in the world today. Welcome to Synthetic Echo. It is your host, Nathan Graham, back again for another episode. And man, if you've stuck through 3 of these, good job. So love it. Okay, so today, I'm actually very excited for today. This is the first financial advisor we get to have on. So my guest today has lived the entrepreneur's dream and then the entrepreneur's nightmare. Michael Santonato. Did I say that right, by the way? Michael Santonato? Santonato, sorry, Michael, is a financial advisor, an author, and a speaker who built a 7-figure net worth and then lost it. The experience of success, failure, and recovery gave him a perspective on money that goes far beyond spreadsheets and stock picks. He now teaches people how to become financially indestructible, which I need a lot of, by building systems that can withstand shocks, mistakes, and volatility in the real world. This isn't just a conversation about money. It's a conversation about resilience, judgment, and what it takes to build a truly secure foundation for your business and your future, especially now when technology promises technology promises automation answers to very human problems. That's the only scripted thing I read. Michael, thank you so much for coming on today. How you doing today, man?
I'm doing good, man. Thanks for having me, Nathan.
Oh, no problem. Okay, so I want to dive right into it because one thing I love about doing these podcasts is I get these little bit of a write-up about people, but I don't really get to know deep dive. Like, we don't talk about your story beforehand. I get to learn with the listeners. So tell me about your story, man. Tell me about the financial success, the financial nightmare, the financial recovery. Tell me about everything. I'm curious.
Yeah, man, happy to. My blessing, every blessing comes with kind of an equivalent curse, right? So like my blessing was like I was raised by parents that were bank managers who worked in the bank, who, met there, fell in love there, and they spent 30 years there, retired in the 1990s, back when you could retire at 55. And I'm the youngest of 4, and they came home and taught us the financial system at the dinner table. So we had these great conversations at an early age, all about money, everything from stocks and investing and debt and mortgages and lines of credit and taxes and all that stuff. And then I was in a very safe, predictable work once, get the job, keep the job, stay in the job, that kind of thing. My parents were boomers, like I said. So they just raised us for security and safety because that's what they were raised on, right? Just a different era. And then when I started doing a ton of personal development at age 25, I was like, there is so much out there. There's so much more possible. There's so much I can do. There's so much good in the world that needs to be done, and I can do it and I can help. So I left the career world, took a cliff dive off the, corporate world and just jumped right into entrepreneurship, realizing later, I don't know what the hell I'm doing. I've never taken a sales course in my life. I don't know how to sell. I don't know how to market. I don't know marketing. I don't know any of this stuff. So I blew through all my savings and investments that I'd accumulated at that time, which was a couple $100,000, which now would be more than $500,000 probably. And I got into all these freaking traps. Like I had a business partner who wasn't kind of pulling their weight, who also had mental health issues and had to sort that out. And just failure after failure after failure, different business, trying, failing, finally having success in a matchmaking business in Toronto where I live, and had a great deal of success, 85% success rate, a lot of babies right now being born and walking around, learning to walk and talk, and just really, really rewarding and highly satisfactory stuff. And then found my ex-wife that way. At the time, she was my girlfriend. So I took her for myself. And then along with her came these kids, right? She had kids. She was widowed and divorced and everything, and just had a horrible story of her own where her ex-husband died and he was the breadwinner and they had no life insurance. And it was just a train wreck. So me, knight in shining armor, kind of came in and I'm going to fix this and share my knowledge and everything. And I realized these kids have no financial education. Every day we live together, and every day I would ask them when they came home from school, did you learn about money today? What did you learn about money today? And it was always nothing. So one day I said, who's going to teach these kids about money? They got to learn. They need to be equipped just like my parents equipped me. And it hit me like a ton of bricks, like, oh, you idiot, it's got to be you. Like, you got to do it, just like your parents did it for you. So you have to do it for them. So I vowed to like teach them what I had learned. And then also I realized this is a massive need globally. Like 99% of people don't get a financial education anywhere. And I have to give it to them and teach and share. So I've written books, transitioned out of the matchmaking business. I became a financial advisor. I built myself back up and my family and my net worth and everything and provided for these kids. Then COVID came and we got a divorce. We lost a lot of money in the divorce. We gave our money to someone else to kind of invest as well. Lost a ton of money there, just riddled with failures and successes along the way. And I'm 41, so I feel young. Numerically, I think I'm older, but I meet with guys that are in their 50s that are just striking it big now, that are just hitting 7 figures and just starting to crush it. So that's kind of
that's great. Okay, so to know, because I was one of those people you're talking about. We never grew up in a financial conversation in my family, man. Like I'm embarrassed to say this, but I had to buy my. You might have a heart attack, so you may want to shut your ears off of this. I bought my wife's engagement ring because I hadn't filed my taxes in 7 years since I left high school. And I got enough of it. Look at that. I love the look right now. And I got enough money back for my wife's engagement ring because I now know how to do that. But at the time, I didn't know this was a thing. I was like, it's the government. Mm-hmm. They take my taxes. They know what's going on. I'm sure they don't owe me anything back. I'm sure I don't owe them anything. It's it. So first of all, that financial system and conversation is fantastic. Going into the second part of that, though, very few people transition from the safety and security of work into starting their own business. That's obviously something that you did do. So I'm curious about that. Growing up in high school, did you always have like an entrepreneur risk type personality, or
never.
Like what drove you to go insane and start your own business? And I say insanity because I did the same thing where I took the risk. So I'm with you.
Yeah, because you become a product of your environment, right? So I was surrounded by all these entrepreneurs and all this personal development and all these courses, and they were in control of their own freedom and in control of their paycheck and their time and their schedule. And I wanted that. And I realized like I'd hit a lid on like where I was at that time in the career in the corporate ladder. And I just had to get out. I just had this internal like itch to scratch like I'd never had before, because I never had any entrepreneurial desires or business incentive or ideas when I was in high school or college. I was wired for stability, and I still fight with that, right? Like as an entrepreneur, when things are going bad, I still fight with like, oh man, like, geez, if I could just like, have it right now with these skills, I could probably go get a job making 150K a year, just salary, just capped, and just it's easy life, right?
Yeah.
But no, like I want to make a bigger difference. My mission on earth is to end financial misery on the planet. So that's not going to happen in my lifetime, probably, and that's okay. But if I can make a dent in the universe, and if I can impact that enough that, people's lives will be impacted, because they are, then that'll have me on my deathbed say, I did it. I gave it my all, whether I failed or succeeded. Like we do have a lot of client success stories. We do get a lot of people money back in their pocket. We do tons of education. Right. We help them get the higher ROIs, pay less taxes to the government, keep more in their pocket, all through education, consulting, and different services that we provide. So this makes a real difference, especially in today's economy with friggin' inflation so crazy and prices going so high, and like the economy's all over the world struggling. So I never had that desire, but now I do.
I can't help but feel for a lot of people, especially today, because it's so different, even from like 5-10 years ago, where having a low income was a hard life, but now it does almost seem to be a little bit impossible, and it doesn't seem to be turning around or getting better. And I just actually got off a podcast earlier today. We have an opportunity with technology. As you know, I'm a big technology guy, but I truly believe with AI, we actually have a technology now to help boost our businesses in such a huge way. Like we actually have an opportunity to turn this around. I always think about that, quote unquote, that American dream or Canadian dream. You get to come and start it up. Well, honestly, for most of my life, that dream wasn't really there unless you got this big education, all the rest. With AI, it's back. Like with AI, you could take someone with very little education, but who's very smart, and then do something amazing. But we're going to go into that in a minute, because if I don't ask this question, it's gonna drive me nuts. What was the first business you started up that failed horribly before the matchmaking one? I'm super curious on
Yeah.
this.
Oh yeah, it's a great question, man. We got to celebrate the failures just as much as
Yeah.
the accomplishments. So I had a buddy who was Nepalese from Nepal and from Tibet,
Yeah.
and he had this idea to import this really rare herb that's like one of the top 7 like rarest and most powerful superfoods on planet Earth. It's called cordyceps, and it grows
Okay.
in the mountains of Nepal. And his family and cousins and friends would like literally have to crawl on their hands and knees and like scour the grass for this worm that becomes a parasite that like gets frozen and attaches itself to the grass. And then like because the oxygen levels and the atmosphere at that pressure at those heights in those mountains, it transforms into this incredible superfood, and it looks like a caterpillar with a piece of grass. Now it's pretty common. At that time, 2011, 2012, it was like unheard of. So the idea was to bring
Right.
it to market here because the natural health movement and the organic health movement was kind of just getting started.
That's when
The
McDonald's had the
problem
health
was
menu.
that's when McDonald's had to add salads. Yeah.
Yeah.
Movies like Super Size Me came out, the book Natural
Mhm.
Cures, all that stuff. Organic industry, naturopaths. The problem was is that it was incredibly expensive. It's worth more per ounce than gold. So who are we going to sell it to? Rich families, affluent people, pharmaceutical companies. We did have some success in the TCM market, the traditional Chinese medicine market. That's already familiar with this, but we basically had to take it out to the barn back and just let it die as an idea and as a business because it was too expensive. And pharmaceutical companies were creating lab grown stuff that was obviously less superior quality, but it was such a fraction of the price. We just couldn't compete. So we had to let it go and let it die.
Right. So, by the way, we definitely learned from our failures because any business person who hasn't been or failure is not a successful business person. They're still on their first adventure. And I want that to sink in for the viewers because we'll have a lot of up and coming entrepreneurs hopefully listening to this. Dude, failing sucks and it's hard. And sometimes you're scraping off the bottom of the couch to go get your next Big Mac and fries.
Yes.
But
Yeah.
that's the system, man. Like every entrepreneur goes through this that is making it from nothing, that wants real change in their life. So definitely I love the celebrating the failures part. Okay, so
Yeah.
talk to me now.
Thanks, man.
You pretty much broke and your wife leave you, which I'm either sorry to hear about or congratulations. I never know what to say in those environments. But having said that, this comes up with these financial concepts. Now I have them here because my memory is that of a goldfish. The 7 destroyers of wealth. I probably do them all. So I want you to say them. I'm going to see if you see me nodding, I'm going to be like, yep, I probably waste too much money on Pokemon cards. I'm pretty sure that one's going to be up there. And yeah. So what are the 7 destroyers of wealth? Let's talk about what people will get from you that you've learned.
For sure, yeah. So it's really interesting because it's not necessarily something like it is habitual, right? Right, but you said like Pokemon cards, so that would be attributed to financial lack of discipline, right? That's one of the destroyers, right? So like having an expensive habit, having something that continually costs you money, yeah, that's gonna suck. That's gonna eat up a ton of your money, right? You basically have like different things that are sapping your money, that are not giving you what you need, that are not going to give you the money that you need, want, and deserve. So there's like silent ones, and then there's obvious ones. There's like silent killers, and then there's the obvious ones. And like I'm having a problem with my computer right now. Hold on, this is so weird.
Yeah,
I'm so sorry.
that's okay. That's all good. Yeah, there's a few little hiccups, but I don't think anything's been big enough.
Right?
Oh, we are. Well, no, we're not live. I can edit this part out.
Okay, man, because like something's weird is happening with my computer right now,
You're good.
which is totally weird. It's like freezing. Let me find out what's going on.
Do you want to restart? Like not restart the whole bar. I mean, just like restart your computer and then come back in.
Okay, I think I got it now.
You
Weird
got
that
it?
the audio didn't cut off. Yeah, got it. Okay. All right.
Okay.
Okay.
So anyway, back to the thing. So these are things that
tell
tap your
me if
money.
you, yeah.
Oh, that was probably the worst cutoff there.
Yeah, these are the 7 destroyers of wealth. You tell me if you're doing any of
Okay.
better now.
Maybe. Hold on. Let me make sure.
How are we now?
Yeah, my side I'm still getting good. Okay, I think that might be good. We'll figure it out. It's all good. It was going okay before. Like
Okay.
it had the occasional cutout, but nothing
Okay.
that was blocking too much. So
Okay. So the 7 destroyers of wealth are: 1, inflation. We just talked about it. You know, they're lying to us when they say it's 2% or 8%. It's more like 20%, right? 2 is taxation. Taxes in Canada are huge. Other parts of the world, massive, anywhere from 25 to 50%. And taxation destroys your wealth. And depending on how your business is set up, you're probably overpaying. And if you're not claiming the right amounts of deductions or credits, then you're overpaying and you're losing to that one. A lot of people recently have been complaining about accounts that don't push the extra mile. They just want to file. They don't want to look at what's, yours and what's owed. The 3rd is unexpected death, premature death in your family. Doesn't matter if it's a parent or a sibling. If they don't have the right insurance and things like that, then you're going to foot the bill to pay for death, because the death has funeral costs and taxes to the government as well. 4 is unexpected illness. I myself got sick in the middle of my entrepreneurial journey, had to take 3 months off, and that caused me to obviously dip into like savings and investments in order to pay for the bills and the staff and the systems and things like that. So having an insurance plan that like covers your illnesses or things like that, hospital visits, Medicare in the USA, stuff like that. Number 5 is unexpected disability. That's also, any kind of disability where you can't work, because when you're in business for yourself, you're the source of income. If you're disabled from any kind of car accident or anything like that, then that's a financial destroyer as well. Number 6 is lack of financial discipline. That might be what you mentioned earlier about the Pokemon cards and that sort of thing, right? And then the last one, number 7, is litigation.
Got Pokemon cards. I slowly got into it with my daughter. That's about it. But if you ever want to geek out, I can talk about them.
I was into it when I was younger. I gave my collection to my nephew once
Nice.
once he became a teenager, right? And the last one is litigation and creditors. So having your legal structure set up properly and not having proper legal guidance or lawyers on your team or people that can help you out with anything legal, then people can come after you and sue you. Or if your business is just set up wrong, like I've got a client who's got 10 different properties and they're all personal, and I'm trying to urge them to put a trust and a corporation together, because any tenant issue or accident or injury on the properties, like all 10 properties are exposed, which makes no sense. I got another client who's got a farm who produces like bee products and bee pollen and propolis and creams and things like that from the bee products. And same thing, it's all in their personal name. So the farm and their 3 adjacent properties are at risk to litigation and creditors because they don't have the proper setup.
Yeah, that's actually crazy to me that people would even run. Like, how do you get to the point of being able to get 10 properties without setting that up right? Like, as I said, I had very little. It was only when I got into real estate in 2010 that I started getting any sort of financial wisdom in the business world. And that is actually a lot of what you're talking about is very scary. I can also tell you on the real estate side, I've dealt with it where a lady had a spouse pass. They did not have life insurance, and it ruins. We went to sell her house. Her husband actually racked up debt she had no clue about because she controlled none of the finances and no life insurance, and she was done. Essentially, you're looking at bankruptcy and just walking away from everything.
Yeah, that sucks, man. All these things are preventable. All these things are preventable with the right education, information, guidance, which is why I wrote the book, How to Become Financially Indestructible.
Okay, so how do you do that? Because I have a theory I want to talk to you about in a bit to see if you like it or agree with it, but I want to talk about first. So how do you become financially indestructible? What if you're to give me the 5-10 minute version of it? Let's go through it.
Yeah, it comes with having, so I'll tell you also like what the wealthy do. So it comes with having a mindset that is like, I handle what needs to be handled. There's no delaying or deferring. I've got another client who's got a painting business and he's the same thing. Like, I don't know what's with people, not incorporated, but same thing, not incorporated. He's got guys that he's responsible for and he's not incorporated. And it makes no sense.
It's so $500. Go to owner.com. Sorry. Not the throw but go to owner.com. I'll give you my bloody referral link. You don't even have to use it. Just go to owner.com, spend $500, protect yourself, and then take that. Okay, carry on. Sorry. Incorporate
Yeah,
people.
it's a process. Like you got to switch your bank accounts. You got to create
Sure.
your bylaws. You got to create your shareholders, all that stuff, issue the shares. But yeah, it's not that complex. You can do it and you need to handle this stuff. So it comes with having a business owner's mindset, which is do it now, right? Successful people are too busy doing what other people are still talking about. One day I'll start the business. One day I'll write the book. One day I'll launch that product or service. The business owners that are doing well, that are crushing it, are the ones that are having a do it now attitude. They've got the right structures in place. They don't have any of the 7 destroyers of wealth affecting them, or if they do have any, they're tackling them and they're doing what they can. You might not be able to afford like a $5 million insurance policy, but you can afford a $1 million insurance policy, right? Get something set up. You know what I mean? It means having a mindset of growth, because as you know, with AI, everything is changing so damn rapidly fast right now. You have to keep up. It's like social media. Like, who reads newspapers? My dad. Well, when my dad's generation passes, these newspapers are dead. Nobody's reading newspapers anymore. I question the blogs on my website. Like, why am I writing blogs on my website? Like, everybody's turning to YouTube now for the information. So,
YouTube and podcasts, and that'll work out for about the next 3 years until
right?
we have holographic people in our houses. Yeah, 100%.
Exactly. So it means having a growth mindset, and it means having all the right financial products in places. So it means like having your will. It means having life insurance if you have a family, disability insurance, hospital, medical care, illness, like all these products that protect you, that you can fall back on when things happen. You pay for the deferral of risk. Insurance companies are the ones that you defer to for the risk. So you have to have your business insurance, your car insurance, all these things, your house insurance, because you're passing off the risk to other people. The wealthy hate risk. They seek to eliminate risk. So all those protection products are an absolute must. And then also putting money away for savings. Some people wait too late to put money away for savings and for taxes or for investments. Like, rule number 1 of basic personal finance is pay yourself first. So every paycheck, every time you get paid, every time you are taking profit, whatever, something has to go to your emergency fund, your savings account, your investment account, your 401k, TFSA, Roth IRA. Like, the names are kind of different in Canada and the US, but the foundations are the same. The processes are the same. Stock market is undefeated at 7% a year. Bitcoin is undefeated at 60% a year. You know what I mean? Real estate is pretty damn consistent at 10% a year. Markets depend, yada, yada, regions and locations, et cetera. But these things, you can't mess these up. Like, they're fundamentals that are constant in the world we live in today. So you have to take care of these things, crush your high interest debt, get it down to lower interest debt, reduce it with lines of credit or other loans, or snowball payment plan, or whatever it is.
So, and I'm kind of curious what you think on this, because I had an aha in real estate a while ago. I finished reading the Bitcoin Standard a few years ago, which is, if anybody's going to take a book away, the Bitcoin Standard is a fantastic book just to understand economics and money. But I had this weird aha moment when it was talking about financial exchanges, how gold backs up values of currencies and everything else like that, why Bitcoin would be a good backup. Is I started realizing everything is an exchange, that essentially money is an exchange for gold, a gold back into money. And then you can look at things, and I started looking at this for time, or for other ways. I'm like, well, technically the same thing happens with coffee. I exchange my money into coffee. The problem is, if I want to exchange the coffee back to money, it's just a horrible way of retaining that value. And so I started setting up my world and seeing everything I purchase now as an exchange thing. So this sounds weird, joking around about the Pokemon cards, but there's actually people I know who are very successful at it because they see it as an exchange and as a value of money. They're not collectors because they want the rare Pikachu. They're collectors because they know the math until they find the rare cards, and then it actually follows a stock market type trend, right? But then there's something else interesting you brought up about taking action. And I thought to myself, well, what's the one thing that we have that we exchange into money? Because we have to have something to begin with to even start the flow of getting money. And the big aha moment for me was time. That time is the one thing that every human being exchanges into money, and it's the exact same principle. Now, I can exchange 8 hours of my time working at McDonald's for $17 an hour, right? Or I can have delayed gratification, trade 12 hours of my day towards building my own business. Now, I'm not getting that today, but the hope is I see that return much higher into the future in how I spend money, right? And,
That's right.
And it was interesting about that take action thing is I would venture to say that this is where they get it. That take action is because that is the best. It'd be like you're investing in Bitcoin versus investing in coffee. I ain't
Right.
drinking
Mhm.
coffee, right? Like it's the same
Yeah.
sort of idea. By taking action now, you're investing in securing your future, and that has its own return as a high
Yes.
savings product. Versus, I can invest my time into playing video games, but unfortunately, that has a very low return on wealth, right? Great return on
That's right.
entertainment, but a low return on wealth, right?
That's right. That's right.
Yeah. So basically, kind of going off that principle, like when we talk about that exchange, so um, I don't know why I want to go on that rant and rave. I think I just wanted to show everybody how
No, it's
smart I
good.
was
It's
about it.
good.
Probably it, but like add on to that. Like
No, it's
how should
great.
people be viewing this? Yeah.
You know, Nathan, chapter one is to talk about money or not to talk about money, right? That's
Mhm.
chapter one in the book. You know what I mean? Like literally talk about money because what you speak about, you bring about, right? And it's not even a law of attraction principle. That's
Love it.
just like friggin' like logic, right? So just talking about it is what starts to break down the walls and break down your barrier or your lack of knowledge, right? So to talk about money or not to talk about money, chapter one. And I tell
Awesome.
a story of like this girlfriend that I had where we're hanging out and having lunch in my parents' backyard. And my parents and I, it's just an average day, nice sunny summer day. And we're talking about money. And we start talking about a rental property in a university area and what the rate would be and the mortgage and how much income and cash flow and the maintenance fees and all these things. And I look over and my girlfriend at the time, she has this like dumbed out, phased out, like blanked out look on her
Mhm.
face. And then I just took a note of it and then later was like, going about my day. And she's like, later on, and just her and I in private, she's like, what the heck was that? And I'm like, what are you talking about? She's like, you guys talked about money like it was like the weather. Like, how did you do that? And I was like, I don't know. We always do that. Like, but that's the thing, to talk about money or not to talk about money. So earlier on in the book, I distinguished like what is money, and there's all these
Yeah.
things. Like it's a tool, it's a resource, it's an energy, it's the universe, it's God, it's all these things. It is simply the ability to exchange value for value. So what you said is bang on. Like
Mhm.
money was invented to make barter or transacting easier because it was cumbersome. It was cumbersome for me to transfer, my cow for your 12
Yeah.
chickens and 2 pigs. That's cumbersome, right? But if I just give you these pieces of paper, then it's easier. Then I can just go pieces of paper for chickens and eggs and pig or whatever, right? And so that's
Mhm.
what that represents. Money is just an ability to trade value for value. You have it or you don't. And then what do you value? You can value Pokemon cards. You can value a new cell phone. You can value the new Air Jordans, or you can value, the Apple stock or the Best Buy stock or whatever it is, because that's where your intention and your desire lies. So it's
Right.
just an ability to
And
exchange value for value.
I think you would agree with this too. Maybe you won't. I don't know. We'll ask it anyways. But I think there's a difference too. There is value in buying entertainment. Like I'm not saying just because going to the movies and eating that popcorn, it might be a bad financial return, but it might be an amazing return on your relationship. Like you're not doing that with
Well,
your
totally.
partner, and maybe that sucks. So it's definitely not saying that. I think, correct me if I'm wrong, but the mindset you're trying to get at is track and pay attention to it and make sure the value of return supersedes the non-value of return in financial ways. Would that be a good way of saying it?
What you track, you appreciate. What you observe
Yeah.
grows, right? What you appreciate appreciates. That's why real estate is called appreciation, because you hold it and you give it some TLC over the long term,
Right.
and thus it appreciates in value, right? So what you appreciate appreciates. That's the tracking part. You do have to track it. You have to know your numbers. Any Shark Tank episode you watch, anywhere, Dragon's Den, doesn't matter.
Yes.
Know your numbers. Rule number one, because the numbers tell the story and they do not lie. So yeah, you have to, like, if you're frustrated about your debt and like, how come you don't have enough money to pay the rent or whatever? Where are you putting your attention? What are you putting your attention on? And so you, number one, have to track it. Number two is it's just dependent upon your goals. Like I have a childhood friend of mine who I still talk to sometimes. It's his birthday the other day, and he doesn't care for money. Like he bought the book, which is wonderful, but he ain't reading it. And I know he's spending his days smoking weed and drinking beer and smoking weed
Sure.
and drinking beer. And he got engaged. I don't know how he's going to make it to the altar, but every couple of months he asks me for money. And it's like, I know you're spending money. What are you spending money on? Send me your bank statements. Instacart, Uber Eats, Uber Eats, Uber Eats, Uber
Yep.
Eats, Uber. So like, it's just what do you value, right? Like if we want to get ahead in business and in life, we want to buy back our time and buy back our freedom and be able to take vacations and cruises and explore and give your kids a good education, give your kids great experiences, then you're going to have to put money towards other things. And like you said, practice delayed gratification.
And it's amazing that you talk about that. So selling real estate for as long as I did, I always used to semi-joke, but when I say semi-joke, it was actually a true trend that the smaller or less valuable the house, the more big screen TVs and pets they had.
Right.
And a lot of times I would look at that and be like, oh my, especially on pets, I'm like, you have 4 big dogs. I can't even imagine. You do not make enough money to take care of all 4 properly. And now I know where all your money is going, why you're not getting ahead. And it's very interesting watching that mentality play out as you go into different wealth brackets. Like, but then again, I think it was Mark Manson said it best in The Subtle Art that, Warren Buffett and the bum in front of the street both have money problems. They just have very different kind of money problems, right? And it's based off
exactly.
what they value into exactly that. So.
Yeah, well said.
Man.
Yeah, and wealthy people are not people without problems, but they are people that have overcome their problems, right?
Yes, and have different problems.
What's his name? Yeah, just different scale of problems. It's so funny because if you zoom way out, let's say the aliens are real and UFOs flying above Earth looking down, they don't give a shit. It doesn't matter. Excuse my French. To them, it doesn't matter if you're if you're going to McDonald's to work a job or if you're going to this office to work a job. And you're Warren Buffett managing all these papers and assets and people, or you're managing French fries and chickens and eggs and sandwiches. To them, it doesn't matter. You zoom it out, we're all going to the same place anyway, right? But it's just about what do you want? What do you want? What do you want? Where do you want to be in 5 years, in 10 years, in 2 years, right? What do you want your quality of life to be like?
Man, there's so many places. I got to get you back on at some point because we're getting to that half an hour part, and I know the attention span of the generations today is that of a goldfish. But I definitely, there's so many places I want to explore on this. But before, I want to give you the last 10 minutes, man. Tell me, I think from our conversation, your mentality and what we're talking about is something that needs to get out there. First of all, it blows my mind what you're talking about. I did not grow up in a business world. So the fact that I'm incorporated with 3 companies and you're talking to people that are not incorporated blows my mind. To me, that's just number one. That's not even financial smartness. That's just financial common sense. What do you do? How do you directly help people? How do we bring people into your ecosystem so they can start adopting this? Because last thing I'll say before I let you speak is I've been around enough, I've seen enough, and I've helped enough people to tell you we're not talking about everybody thinks you need hundreds of thousands of dollars to make a dent in this, but that's not the case. You can have real financial freedom just working a good job. So how can you help them? How do you bring them into your ecosystem?
Yeah, what I do is I help business owners become financially indestructible. I do that through consulting, through mentorship, through books, group programs, and then public speaking engagements as well. I'm an award-winning public speaker. This is my third book that I've written. And my favorite thing is education, because like I said, I got to pass on that education that I got from my family, from my parents, onto others, because most people just don't have it. I help people make more from the money that they currently have. I help them get out of debt, pay less taxes legally. I'm currently developing a tax algorithm and software that allows people to get back at least $300 on the easy quick within a few minutes. And then there's other aspects that we're developing inside of because taxes are our number one expense actually. So I'm tackling that, and I'm really excited to be tackling that. So people can get connected with me through my website at michaelsantonato.com. I highly recommend everybody read the book. Leaders are always readers. The feedback I'm getting on the book is amazing. It went through 5 rounds of editing and 3 rounds of full writing drafts. It took me 3 years to finish it and publish it. I'm really proud of it. And it's available on Amazon as well. You can grab it there too.
Yeah, I'm literally going to jump off this call and literally jump on and get it. Because awesome. What you said about that leaders being readers, people that changed my life. I was 23 years old, married, and cocky as shit, and I thought I knew everything. I didn't need to read books. I thought I was the guy to teach everybody. And if you keep that attitude, you're just going to get humbled down to the ground. And now I set reading goals. I can't do it. I'm not one of those people who are going to read 50 books a year. I go through phases, but reading is a high form of education. I need you to understand this, people, that when our parents were growing up, they did not have access to education. They had to spend hundreds of thousands of dollars to get the education that we're able to get from books and YouTube and things like the Peterson Academy and all the rest. So please read, start here. Any highly successful business person, I'm so positive this, I'm going to say this and Michael's just going to agree with me. And if you don't, you're welcome not to agree with me, but I'm so positive in this. Every highly successful business person did not blaze the trail. They were not the trend setters. They were the trend followers. Every once in a while, somebody gets lucky and creates a trend. Do not be the trend setter. The successful path is already there. I've said this a few times. You're probably going to hear this on a lot of episodes because I record this like within a week and then I'm retelling stories. But I started podcasting a month ago at the time of this recording, and I've been on 44 podcasts. I have another 23 booked up. My website is booming. I'm getting viewed from all over the world, not because I'm exceptionally smart or anything else like that, because I went to AI and I created a business plan, and I'm following the plan of people who've done it before. Michael's done this before. Until you can tell me you've lost 7 figures and rebuilt it, then you can give me your plan. Like that's why I'm not giving you financial advice, because I don't lose. No, I'm just kidding. I lose more than enough. Michael's giving you the advice because he's done it and he's rebuilt it. He knows what you're doing. So please take his advice on this. Any final thoughts, man? Anything else you want to say in there?
Yeah, I'm working on the audio book right now. I know reading is hard. I actually do read, but like I know that reading is. I like audiobooks too. I got a bunch on the go, but just wrapping up editing the audiobook right now, so you can grab that at my website at michaelsantonato.com. It'll probably be out in like a week. I'm just putting the finishing touches. But what I want people to know is that you can do it, and you're not in this alone. And somebody who's been there and walked the walk and done it can save you so much time and money, and that's what. Nathan was just saying, you were just saying, is like leaders are always readers. Yes. And leaders are leaders because they're great followers first.
Mm-hmm. Well, there is way too much information to figure it out yourself. One of, again, those weird aha moments I had in life about education information is, and this had to do with my daughter, is the reason why I pass on what I learn, because so my daughter will be smarter than me, because she will be one day, because I'm giving her a catch up. I'm giving her 42 years of experience right now at the age of 7. And then she's going to have that hopefully by the age of 19, 20, and then she's going to excel past me using that as the base and become very smart. And this is how you do it, man. Like I've written books, you've written books. We don't do this just because of anything other than passing on what we've learned to give people a shortcut. And I mean this in all due respect, Michael, but it's probably not your trailblaze shortcut either. When you talked about, here's a question for you before you go, because I'm super curious about this. When your business was failing, were you trailblazing or were you following successful patterns?
Definitely the first business that failed, we were trailblazing. The second one, we were the one that worked. My first business that worked, matchmaking, hit 6 figures quickly within 2 years because I was following a pattern and program. And then even financial advising too. Like I followed a very strict program and I followed it to the T. And I had a mentor who'd been there who was doing it, and I just followed everything he said and just copied him, and I hit really quick success in that one too.
R&D department, rip off and duplicate, right?
Yeah, man. Well said.
Well, no, that's exactly it. And I truly believe that's the key to success. Anybody's first failure in business, usually the lesson that they learn is listen to somebody else who's done it. Don't try to figure it out yourself. But that's my 2 cents around that. Anyways, Michael, man, I have a short outro trip. Then I'm going to bring you back on just to talk to you off recording so we can talk about all these listeners and all the rest behind their backs. But I want to let you know, I appreciate this. And everybody out there, no matter where you are in the world, whether you are from Australia or from United Kingdom, Spain, I love all these places around the world who are hearing my podcasts. Pick up a copy of this book, man. Money is a universal language, and it's a universal fundamental and principle. And look at Michael. The beautiful thing about technology today is we have Zoom. He might not be flying out to see you to give you the advice, but he will mentor you and coach you through this. And he will probably fly to Ireland for enough beer and enough stages to be able to go talk as well if you pay him enough. So, all right, man. Thank you very much. I appreciate you, eh? All right. Ciao.
Thank you.
We're human today, where technology meets us and ideas lead the way.
Business and connection, growth in every sound. The future keeps on calling. Can you hear it coming now?
Where human meets machine, create it, build it, grow it, and shape what comes between.
The future starts